Everybody. Hello, this is Mike Newmeyer again. 410-902-0464. Game plan for retirement. And I'm going to talk today just a little bit about income in retirement. Income in retirement. Interestingly enough, a lot of people will talk about how much money they think they need to retire, how much they think they need to have in a nest egg in order to retire. And that's okay to think about it that way, but you need to break that down, because some of that income is taxable, some of that income may not be taxable, and you need to break it into different categories and start out with this idea that the notion that you're going to need less money in retirement than you've been using while you're working your working life is probably incorrect. It's probably incorrect. Even if you inherit money, whatever your sources are going to be, the total will end up being more expenses in retirement. How can that possibly be? Well, all you have to do is look out there today at inflation. You see what that's doing. Everything costs a lot more. Is this the last time we're going to have inflation? Not at all. Not at all. And inflation hurts people with fixed incomes more than it hits anybody else. And of course, it hurts the poor a lot more than it does the middle class, etc. But you got to plan for all the possibilities, the ones that we can plan for. There's always that black swan we talk about in the financial world, that surprise that hits us, like the recessions and so forth and so on. Which brings to mind this, that if you're depending on the market, that is, if you're depending on mutual funds or stock dividends or any of those kinds of things, my advice to you is don't depend on them. If you're going to be in the market at all, then you should not have money in the market that you cannot afford to lose. Now, losing, of course, occurs when you sell those investments. The point is that you may not sell them if they're down. You may not sell them if they're down, but they are not going to be providing income of any real consequence to you, and you really shouldn't use them for income as the market goes down because you're reducing your principal. So my advice to people when it comes to retirement time, planning for income in retirement is not to rely on the market. Talk to us. Come and see me, Mike Newmeyer, 410-902-0464. If you want to have safe money growing tax-free or tax-deferred and have it available to you in retirement and know what that amount of money is going to be. We have wonderful, much safer kinds of investments than you're going to find in the market. Okay, that's what I'm all about. That is what our business is all about, and we're ready to provide you with that kind of help. There's no obligation. If you call me at 410-902-0464, I'll be happy to talk to you on the phone and give you some ideas. If you come in, we can look at everything you have and we can help you. When you hear on the radio or television that you need $500,000 to work with any company, and there's at least one that says that all the time, that's not us. That's not us. We will work with you based on what your situation is. And $500,000 they're talking about, you may find out you have more than you think anyway, between your 401k and various sources of wealth. But that's not the point. The point is that we'll meet you at the level of your needs, and we will help you plan for income in retirement. Now, some people are going to work even after they retire, and that's all part of the income. But anyway, so let me talk about some of the plans that are available and that you should be participating in if you're going to retire in the next, 4 or 5 years or longer. First of all, the IRAs, okay? Individual retirement accounts, we've had those for a long time. You know how they work. You know how they work. The money that goes into those is limited, and every year that number, may change. But the point is that whatever goes in there is before taxes. Anything that goes into a traditional IRA will be taxed when it comes out. And if you don't touch it when you get to be 72 years old, basically you've got required minimum distributions. That means you have to take out a certain amount of money, and you will be taxed on that money. And that money cannot go back into an IRA. So keep that in mind. Now, in our products, the income you receive covers the required minimum distribution. So basically, it's going to be more than your required minimum distribution. So it becomes a very simple process. You're not going to have to worry too much about the required minimum distributions, because the income you will be receiving will satisfy those and more. Okay, so that's something to keep in mind. All right, but individual retirement accounts are available to everybody that works, and even to spouses that don't work. Okay, so keep those things in mind. Come see me, I'll go through more of it, and I'll show you suitable investments for the IRAs, to keep them safe, and so you don't lose the money over time. They'll be there for you, and we can tell you and project what the income will be based on what you put into those IRAs. Now, of course, that's the traditional. Now, the other kind of an IRA, and I'm speaking from my seminar I've been putting on for many, many years, of course, is going to be the Roth IRAs. And the Roth IRAs basically are after-tax money. So you're taking money out of savings, you're taking it from sources where the tax has been paid, and you're putting them into Roths, and so the taxes are done. When you put the money into a Roth, it grows completely tax-free. Now, if you have to keep the money in there past 59 and a half, and it has to be in there for 5 years over the 59 and a half. So pretend you put it in at 58. Then forward, you have to wait 5 years before you can actually consider it a Roth. It becomes a Roth after that period of time. And then when you take the money out, it's completely tax-free. You may not take it out immediately, and that's okay too. In the products like we have, which are lifetime income products, it makes sense to start the income as soon as you can. And that's past 60 years old in our products. But remember, you got to have 5 years in to make that a Roth. But once you've got the 5 years in, and so for the past 60 years old, if you want to, you can start lifetime income. Lifetime tax-free income. Big deal. Now, you can also convert your money that's in an IRA or your money that's in a 401k, which has to go to an IRA. You can convert that money as you take it out of the IRA instead of putting it into another IRA. When you take it out of the 401k, instead of having it go into an IRA, you can put it into a Roth, but you got to pay the taxes. And you got to be careful when you do that it doesn't raise your marginal rate on your whole taxable income. That's something you got to review with your accountant, and we don't give tax advice. So you look at that, you get the answers to that, and then we can help you make the changes. So that's pretty good, pretty important. Okay, so those are two of the sources. Lots of other sources. You may have some rental property that you're using for income for retirement. You've got to figure into those kinds of numbers. You got to do a little budget, do a little calculation, and pretty much plan for repairs that are going to be required, and also for the taxes on those units. So that's something you work with your tax person on, but that could be a source of income. There's lots of different things like that. You may have some dividend stocks you're holding for the dividends, and then you have to look at the taxability of those kinds of things. And so there's a whole series of income types. And of course, your 401k. What are you going to do with your 401k? It's time to roll it over. What are you going to do? It has to go into an IRA. It can go into a traditional, or as I said, or a Roth, but you're going to have to pay taxes if it goes into a Roth. But the main thing is to not lose the money that you roll over. Now, right this minute, we have a wonderful, safe product that you can roll the money over into and get a 20% bonus. Interesting. Can help you make up for any losses you've had in your 401k. A lot of people like that. That's a wonderful opportunity, and you could start income thereafter. So that's something to understand. Okay. There's another thing you can do. Let's say hypothetically that you're 50 years old, but for some reason you want to retire now. You just want to let it go and retire. Well, you say, well, I can't do anything with my 401k until I'm 59 and a half. Well, not exactly. There is a provision in the tax code called a 72T. Now, what that allows you to do is to start income early. Okay, start income early. Now, basically, you're going to have to take what they call substantially equal payments, which is basically the same payments all the time. We can do that for you. We can put it into a safe product. We get the bonuses and start the income using the 72T. A lot of people don't know about that. Those kinds of tax code items are available for anybody, but they, think about sports people, think about athletes. They can't continue to play football when they're 60 years old. So, and there's lots of others. You may put 30 years into a job and say, that's it, I can get my pension, but I can't really use it until I'm a certain age, let us say hypothetically, but I can do a 72T. I can do a 72T and start my income and not have any tax penalties. I'll pay taxes, but there will be no penalties. It'll just be ordinary income. So that's also something that you ought to understand. The 72T is something that's available. We've helped a lot of people do them. We do them using the safe money products that we make available to you. So those are all sources of income that you ought to consider, and we can go into a lot more detail on these, and I'd love to go through all of it. Of course, Social Security is going to be there. Social Security, and people say, well, when should I take Social Security? Well, if you are not going to work at all, then you certainly should start it at 62. Well, but of course I'll say, or they'll say, but my full retirement age is 67, let's pretend. So you're talking 5 years. You're talking about 60 months. So 60 months worth of checks that you would not get if you waited until 67. How do we know how long we're going to live? And we know that we're going to need money, and that what we're going to need is going to be at least what we were earning and probably more. You can start it at 62 and you can have it for the rest of your life. You will always be less than if you waited. But the fact of the matter is, if you wait, you've given up those 48 or 50 checks or 60 checks that you would have gotten. If they tell you you're going to get $2,000 a month at full retirement and you're going to get $1,800 at 62, okay, just do the math and you see it makes a lot more sense to start it immediately at 62. We've done the calculations, and we find consistently it takes about 9 years to make up for the income that you didn't take at 62. So think that through. I can help you with the calculations. Mike Newmeyer, 410-902-0464. Call in, make an appointment, no charge, no obligations, and I'll sit there and I'll help you figure these things out. Life insurance can be a source of income. How's that? Well, your cash values. If you have whole life or some other kind of permanent insurance, you build up probably a nice amount of cash value if you've been doing it for a long time. And you can take that money out or part of that money out, and it's completely tax-free. It's completely tax-free. So that's another source of income that's available to you. And then I mentioned already that the rental income. And home equity is available. A lot of people don't like the idea of reverse mortgages, but they work for a lot of folks. I don't deal in that kind of product, but I'm happy to explain to folks how they work, okay? And a lot more people are doing them now than we're doing them. Now, rates are a little higher than they were, that's true, and they're not probably going to come down real fast, but they're out there, and the rate may, if you look over a long period of time, if you get a variable rate, it may work for you. If you get a fixed rate, it may work for you, and I can explain some of those ideas to you. So those are pretty much the sources of income. There's always a few others, and so forth, but those are the main sources of income. And if you want to go over this material, you call me, 410-902-0464. You come on in, no obligation, no charge, and I'll go over anything in detail that you want to know about, and I'll try to give you some printed information about all those things. Okay? I hope you take advantage, and I hope you come and see me. Thanks again, Mike Newmeyer.